Now here we are at our latest acquisition of 236 doors, a $26 million asset here in the Dallas-Fort Worth area. And if you're an investor, you won't be able to get in on this deal, but if you're interested in getting in on the next apartment deal that we have to offer, make sure you fill out the investor form down below in the description. That way we can notify you on the next opportunity. We'll have a quick call and a discussion, see if it's a good fit for you, no obligation, but make sure you fill out the investor form below so we can inform you about the next deal. All right, we're here with our latest acquisition called Luna Vista, 236 doors, right about $26 million for the total asset here, right in the heart of Fort Worth. Wouldn't you say? And I'm with my business partner on this deal, Neander Lima. How you doing today, man?
Pretty good, man. Thank you so much for having me, man.
So Neander's going to be breaking this down with us today. We're going to kind of talk through all the acquisition, the funding, you know, where we found the deal, all these types of scenarios that go into it, just like we've done on the previous videos. And then also, of course, this one is all closed out, but if you're interested in getting involved possibly on the next deal, make sure you fill out the investor form down below in the description and we'll see if we can get you in. So let's get started on this one. First of all, I mean, man, this is a nice little playground.
It's
you got
a nice
full jungle. This is better than my school whenever I was growing up.
I know, absolutely. So I take my kids to this playground close to my house, and man, I wish it was close enough that I can bring them here, because this is awesome and create such a great community too, you know?
Yep.
One of the things interesting about this property, when they're for sale, we did our first visit here. We can cover a little bit about that, but it was in the after school. The kids are all playing here, man, and that gave right away that sense of community, which you know we loved. It was amazing.
You want a place where people want to live,
absolutely,
for sure,
absolutely. And
so let's talk about that first. Like, how did this? You came over here. I mean, how did it come up? Did you have a broker contact you? Is this word of mouth? Is it relationships? Like, how did you come to know this was kind of on the market, or was it on market, or was it off market?
It was on a market deal, a fully market deal, and we happen to. This is the third property that we buy from this particular broker.
Okay.
So we do have a pre-existing relationship with the broker, but it was full blown. So we underwrote it, and it happens that we have to know the sellers. They're part of the same group, the mentorship that we had together. So we knew the story of this particular asset. And you know, when you're buying a used car, right? Would you buy from somebody that you know or from somebody that you don't know? So that actually made it easier, because when the process, you know, was a lot of information available they probably wouldn't have if it was just, you know, somebody that we didn't know. But the brokers is actually definitely a very good relationship that we need to have with the brokers in order to get, you know, access to those deals. So that's what this deal came about.
Okay. And so whenever this came up, what was it that made this deal attractive to you? Other than, I know you came in here, you saw kids playing around, you got that sense of community. I mean, it looks like the units are in pretty good shape, and which we're going to take you through here in a little bit and actually into some of the units so they can see what some that need to be rehab,
some of them that just moved out, and some of them they're already renovated.
They are, okay. So we're going to look at some renovated, some pre-renovated and post-renovated,
exactly.
Right?
So
all right, so we're going to take take you in some units, but from the outside, looks pretty amazing. Was it in this great of shape, or have you already knocked out some improvements on here?
Well, yeah, we did some improvements, but first things, like when we, you know, it's very important for you to know your criteria. Yeah. What are you looking for?
Your buy box, they call that.
Exactly. So for us, nowadays and age, we look for anything over 150 units and above.
Okay, 150 units and above.
Between late 70s to 80s, that's a sweet spot for us.
And this was built in
1979.
That's a great year, by the way. That's my that's my birth year. 19.
So
this is a 44-year-old complex for simple math.
So that was our criteria. When it comes into our box, we get a lot of deals offered, and sometimes we don't look at it because it doesn't fit our criteria. Yeah. So this one definitely fit the criteria, check the boxes, and then no matter how much the deal looks great, all it talks is the numbers. You need to look at the numbers, right? So the numbers definitely make sense. And the opportunity here, as you mentioned, the buildings, the bones look really good. So our business strategy here is mostly the interior renovations.
Okay.
We do have another property close by. It's about 16 minutes away from here. We're already holding for over a year and a half now. So we do have a lot of data. It's a very similar asset. It's a smaller property, but a lot of data that we collected in there by renovating the same recipe and are applying here. So definitely it worked for us on those.
All right. And so for those of you, if you don't have a buy box, that's definitely something you want to create, which the buy box is just simple terms for what's your criteria. What exactly are you looking for? Clearly, this was in the buy box. You said of date range of a building you like to be able to improve, right?
Absolutely.
So, and then also price, that definitely helps out. Location, of course, always.
Always location.
Because you're not far from here. You live in the Dallas area, right?
Yeah, we live in North Dallas. Yeah, and four of our properties are here in the Fort Worth area. So
great area. So buy box, date range, price range, location, all that fit into it. You got a good sense of community. Anything else? Like when you looked here on the outside, did everything look okay? I mean, of course, you got to do due diligence. You got to dig in there. But on the surface, did it
like
it
I said, when you buy from a reputable broker, a lot of the information is already fed to you. So we know that we needed to do some work on the roof, which we decided to have to do it all. So before I just pencil out from, we call it the back of the napkin underwriting, I already counted in, for a property like this, about $200,000, $300,000 with the roof repairs, which that might torpedo your numbers, right? So it's something that you really need to look out for, the foundation repairs, asphalt repairs, and stuff like that. It really increases that CapEx budget that might literally, again, torpedo your deal, right? But a lot of the things here we knew right away from the get-go. So there's not a mystery that we closing this, we didn't budget for. Everything that you budget for, you can buy, no problem. Because, the thing is that you're dealing with the unknown. That's the problem.
And that's why I love working with investors, because like you said, $200,000 to $300,000 on a roof repair would scare off the normal person. But
100%.
if it works with the numbers, then it's just part of the numbers. It's like, okay, all right, we can work that in, purchase correctly. And, I've always said you make your money when you buy. So as long as you buy correctly, you have room for those renovations, fix the roof, and of course you're enhancing the overall of the property. So that way, then does that lend into, was there rent gaps here as well?
Rent gaps. So.
Yeah, like as far as the market, as far as the rents being under market as to what the comparables were, or
of course. So we do studies that study starts like this. We go into 2-3 mile radius, and first thing we should look is what is the median household income in this area. Because that is going to determine what kind of renovations, what kind of product I'm going to offer to the clientele in this area, right? And then second, we're going to do the comps. So we're going to look, as you drove the street here, you probably saw about 6 or 7 other apartments,
like
and they're all
competitions.
Exactly. So we try to reverse engineer now. If I'm looking for an apartment, what are the things I'm looking for, right? And this is something after closing is another subject that people don't usually talk about it. But if I have this beautiful playground, I can paint a picture of this selling as a community, not renting you an apartment. That's what makes a whole difference, right? And then of course we need to be within the comparables. What do they have that we don't have? As far as amenities, what's the cost per square foot? What is the customer service over there, and all the deferred maintenance and stuff. So we go there and shop a little bit. We go to the office, walked in there, hey, we'd like to rent a unit, and then they'll be like,
the secret
shopper, to make sure that when we're coming in here, we know what we're getting into it.
Then if you need to replace management or not.
Absolutely, that's a big deal, man. And now this is a business, Levi. It's not, it's a real estate component, but it's a business. We have, there's 4 or 5 people working here full time on this property. There's all these aspects of business. So with that mentality, you need to make sure that you run this as a business. And personnel, it's actually a big deal.
Yeah, I like that. That really hit home with me. Jana, mutual friend and business partner, when she said that, it just really resonated with me. She's like, we're actually buying a business. Not really investing in an apartment. I mean, it is apartments, but really it is a business. And it's funny because I hear people that buy businesses, and some of them say, I would never buy an apartment complex, and it's funny. It's like, well, but it's actually a business.
Yeah, absolutely. And it's one of the things, like, people need a place to live, especially when we see data, like, you know a lot about this. There's, a lot of people moving to Texas overall, in Dallas, so we're insured of housing. So can't go wrong with apartments.
Let's go. Let's go walk some other parts of the property.
Let's go. Yeah, but this is a really nice playground. And there's a splash pad right there, by the way. They used to have a pool. The pool used to be right there, and they cover it up. Look, man, I have other properties that have pools. It's just
they covered it up with that shed?
Yeah, they covered up with the shed. That's what their office maintenance is, but it used to be a pool there.
Okay.
Pool is a freaking pain in the ass.
Yeah.
Right? You have to deal with liability, maintenance, the pool, and stuff like that. And believe it or not, if you look at, I collected actually data one of my properties. How much does people use the pool? It's like 4 or 5%.
Oh, wow.
Yeah.
And the splash pad, I bet they love the splash pad.
Oh my God, they use it almost every day in the summer. They come here and there's like zero liability, right? The kids
and you don't
can
have to
grow
worry
and
about
all
the
stuff.
kids drowning. I mean, you know,
100%.
that's the thing. You don't have to worry about that from a parent and from an ownership standpoint.
100%.
I mean, that's a big, I never even really thought about that. Like, I mean, that I know pools are always a big concern, and the liability is the number. That's way more concern than the maintenance of it.
It is, and also permits that you have to pull with the city, and there's a lot of stuff to it. It's not just the pool itself; it's a pain. If you have a pool at home, you know what I'm talking about, right?
Yeah.
But also the licenses and all the things you get to do with the pool. So I don't mind at all.
So we're gonna go check out a couple of units.
Let's go check it out.
Are we jumping on the golf cart?
Let's go. Let's go skip for a ride. So Levi, one of the things that when we do close on a property, it's part of our strategy. We try to take care of visual things first, that the tenants in this community will be like, okay, they're changing the management. Because sometimes when it changes management, it's like, oh, there's another guy. They're just going to come and button our rents.
Right.
But when we come in and replace all the roofs and start making some amenities here, which we're going to build the gym pretty soon, they're like, wow, they're coming in to actually uplift this community and make it better. So you get not much of the resistance, you know? So we came here and replaced all the roofs, which it was definitely needed. When we saw the aerial shots, some of the areas was like the buildings different than the other in colors, and then patching up, and you know.
Yeah, the roofs look great.
Yeah, another thing we did some, there are a lot of overgrown trees, and we kind of trimmed them out.
That's something else you got to account for in the CapEx budget, right? Because trees can be very expensive.
Very, yeah. And you know, so we do our own due diligence, but the lender comes here and do their own due diligence, and they're going to give you a list of things that they want you to do first. For example, overgrown roots and the sidewalks, the trip hazards, they're going to make sure that, you know, those are safe, and some other stuff.
That could mess with foundation a little bit on some of these units too, right?
Yeah. So going back to your underwriting principles, you have to be everything that you underwrite for. Go a little bit extra. Yeah. Right. Let's say you're budgeting for a roof. Let's say, you know, if you have experience, get a couple of quotes, 250, budget $300K. Just
do you have a percentage that you typically like to go over, or do you just add do you like to go 10 or 20% over?
Well, because we do have our own construction company, I'm able to be a little bit more accurate on the numbers. But if somebody's starting out and just underwriting this, I will go at least a 15% cushion.
15% cushion, okay.
10 to 15% cushion on the island.
All right, so now we're at a unit where they just vacated. All right, so and we're going to renovate this one?
Yes, we're going to renovate them. So right, let's go
let's check it out and see. We got a little bit of a mess in here.
Yeah, they're already started right away, so we try to get our
So units. they didn't tear the place up. This is just this is a planned renovation.
Exactly. So this is just a start. I think they do the first things is the painting first, right?
Yeah,
they come in and paint the walls, make sure there's repairs, and they're gonna tear out this floor and put their vinyl. Sometimes
so replacing the
tiles. Okay. If it's carpet, definitely replace. If the tile looks good, just to save on a budget, we might consider keeping it. Yeah. So it goes by case to case. Our construction crew comes in.
So why, if the tile's in good shape, are you just trying to update it with the vinyl planks?
Yeah, update it. There's a
it does make it a nicer look. Yeah.
So come over here. We're gonna see on all the unit when there's fully renovated. But basically, just walking through, we're gonna put some nice backsplash. We're gonna replace the cabinet fronts. We're gonna put stainless steel appliances and quartz countertops, and all this, you know, because we buy it as a bulk, so we save a lot of the cost, right? We're having our properties here in Fort Worth as well, so we just bought 44,000 square foot of flooring, so it makes it a lot cheaper to come in and put on those properties and make sure we save. So one of the problems that we had before was that usually they have staff that could do those what we call make-readies. Okay. And then what we did was we just did our own construction company separate to come in and turn those units. And what happened is the tenant makes a notice to vacate, they give, by law, they have to give 60-day notice, usually the contract standard, and then we already book the contractors and all the people to be here day one as soon as they move out.
Yeah.
So that way we turn this as fast enough so we can lease this units not sitting here. And before, because the guys were coming here and doing it on their own terms, it'd be like 30 days, 35 days, depending on the amount of renovation. So be able to turn those quick and efficiency.
What's the timeline you want to get this one done in?
This one, it's 10 business days.
Oh, wow. Yeah, so what's the square footage on this one?
740. Yeah, this one is 1-bedroom apartment. And I actually, for a 1-bedroom apartment, this is really spacious. The way the floor plan is here.
Yeah.
You look at the size of this bedroom, the
good
closet
walk-in
is
closet.
a huge walk-in closet. And
Does Rafael, the rents, what was the rent before on this unit?
On this one, it was 1060.
1060. And is the rent going to increase a little bit after renovation?
Yes, and as far as like on a newer renovated unit that we've actually rented out, like a pre-lease, they had no problems on that. They love the unit. Literally, they love the backsplash, the tile, the new flooring.
What price point are we going after?
On this one, I believe 1160.
Okay, so about $100 a month increase?
Depending if we keep it classic or we're going that, sometimes it goes up to, and then too, depending if we lease out like the private patio, because some of them have little private patio.
Yeah.
They can go up to 13.
Oh, wow. Okay.
yeah.
And there's no pushback on those.
Yep.
We invested a lot on the kitchen because this is where it sells,
Yeah.
when they're in the business, we put in the kitchen.
Big
Yeah, you got some good sized windows in here. I like how the patio's off the kitchen there too. I mean, because that door was open, you feel a little breeze coming in while you're cooking, especially if you burn something, right?
And we do have a few plans that has what we did, the extended patio, that we charge a little bit extra for that. Also the cover parking. Again, this is a business, so any extra income, it actually what determines the value of this property, right?
Right.
Pet rent and all that stuff. So let's go look at another unit.
Do we have one that is renovated?
Yes.
All right. So before we head over to the next unit, you mentioned next on the list is going to be some carpentry work, or some of the fences, or the.
That's going to be, if you look at the fascia there on the carpentry right on the side.
Okay, on the side. Yeah.
Those needs a little bit of repair, and that is going to be over, I think, 150K with the repair. So it's also a big deal. We're already counting on that. It's not a surprise. I'm including the gutters on that budget as well.
Oh, you're including the gutters too, because I can see that we got a little bit of a hang there.
Exactly. So they're going to be, gutters is a big deal, especially for foundation. Here in Texas, how bad it is, our foundations here, so we got to push the water out, and also protect the carpentry for the future. So definitely it's something we're going to be doing next.
All right, good. Well, so we'll head over to the next one.
Another thing you can be conservative on when you're underwriting a property like this is on your rent growth. You can't be too aggressive, right? It's not because you think that your apartment you renovated is beautiful, but it's what actually you're commanding on the rent bumps. So we budget around 8 to 10%, and we're commanding actually on our next. This one we're still trying to do a market survey, but what is they're flying off the shelf? Because we just renovated a batch of apartments now, and then we start playing with the price. But our initial underwriting is about 8% of rent increase on the year one. But for the other property, which is close to here, we're already commanding a 28% rent bumps.
Oh, really? Wow.
Yeah.
That's good. And that's great for the overall value of the property.
100%.
Yeah.
Oh, yeah.
How many sections, you know that off the top of your head, how many sections there are?
How many buildings?
Yeah.
No, I don't know on top of my head, man. And that's a good thing.
Yeah, yeah.
I don't know. I have to ask the staff. I don't.
You don't memorize stuff like that. That's good.
I don't. The numbers is
they say, so I think someone asked Einstein for his phone number and he didn't know it. He had to look it up.
Exactly. I know who has it, right?
Yeah. Well, he said I'm not going to waste my memory for something that I have written down like that, right?
Yeah.
He wants to keep it clear for thinking. So
I know. If people ask me about, numbers is not my things. I do the business plan implementation, some of that stuff, the front end, but numbers is definitely Delia. She's amazing, man. And it's a team sport.
It's a team sport. Absolutely.
Right?
Yeah.
We partner up on this deal, and we will leverage each other's experiences, right? And this is all about multifamily. It's like literally it's a team sport.
So what would you say your major contributions are? Is it construction cost?
construction cost and the business implementation, the business plan, and also for the networking and investors, right? A capital raise. This is where my area is in the capital raising. This is what we do.
All right, let's go inside.
All right. So this is a unit that is ready to lease. The only thing it's missing here is going to be, because it's back quarter, is going to be that stove and the fridge. It's stainless steel. Right. So it's back order right now. It's going to be matching this, right?
Yep.
And it's a flat one. It doesn't have this top thing. It's beautiful, by the way. So this is the top renovations we do. The backsplash.
I like that clear.
Yeah. The
subway tile. Very nice. Quartz countertops.
Quartz countertop. This, this also is from us. We manufacture this, guys. The flooring and the cabinet fronts, as I mentioned to you, it's a big difference.
Yeah.
But that flat one is a little bit old.
Yes, sir.
I'll let you went right back. It's already pre-leased.
This one's pre-leased. Nice.
That's fine. Doesn't matter. And this one has the floors in here. So
this one is the studio efficiency, right?
It's efficiency. Okay.
Yeah. This is the studio model. It's not. It's good. They kind of did this well. The previous owner did this wall, as you can see here. It, on top actually has the. But this used to be open before, all open concept studio. So they did this wall and call it efficiency, 1 bedroom, So at least you have some type of privacy, right? Which is cool. Another thing we did here is the toilets, right? And in the bathroom. So put the slides, this mirror, the faucet here, the sink. We resurface all this and get a paint, and of course in the model. So this one's ready to go.
We'll put the vinyl flooring in
the closet. Here. There's a closet in here? Oh, okay. Oh my God, this closet is big. So you can put a stackable here.
Got room for a stackable in the closet. Very nice.
That's actually, for a studio, it's a decent closet.
Yeah. Oh, well, what's the rent on this one?
This one, it is $1030.
$1030. All right. And you've already got
500 square feet, and it's already produced.
Already pre-leased, ready to go?
The other one is already also produced.
No, they move in, and then whenever the stove and the fridge gets here, you'll just replace them?
Yeah, if it doesn't get in time, yes, we come in and just let them know, and we'll swap it out. Maintenance guys will do it.
Okay, perfect.
Now, I would like to show you guys our model unit, and why do we have a model unit?
So before we check out the model unit, you mentioned that you're going to be installing some covered parking.
Covered parking, yes.
And that you can charge for.
Absolutely. Right off the bat, some properties we implement just the reserve parking, which the cost to do that, it's a lot less than building a whole carport or cover parking, right? You can just get a spray paint and paint reserve done and then charge $15-20 per spot.
Yeah.
But again, when you're looking at the long term, charging $45-50 per spot, which is, we did a little survey, send it out. Well, would you like to have, would you rent one? Is already all kind of pre-lease.
Yeah.
Already, we didn't even build. And then we're gonna, we did a study, what would be the best strategic spot. It's not gonna be the whole property, just in a few spots. Yeah. And it's very high acceptance.
Well, that's a good deal too for, we do get hail here in the Dallas-Fort Worth area, once or twice a year. Is it severe enough to damage cars? Sometimes not, but even some of the smallest hail will do that. So having the covered parking can help out on that.
And it's good for always study what is your clientele. Yeah. What is the demand? So we have access to the rent roll and making a study and see what is their median income for that unit or for this property overall. So people be able to accept those amenities, right? So definitely there's something.
You definitely don't want to spend the money on that, and nobody buys into it or reserves that.
Yeah, absolutely. Reserve extended patios. This is actually a very simple amenity. It costs very little to do, and we can charge also extra $50-60, depends, and it's great. Look at this. People can have a little barbecue out here. They can have their dogs, and it's awesome.
Yeah, it's like having your own little yard there.
Yeah, so we come up with some creative stuff like that to generate extra income for the property.
And then also you mentioned pets are allowed on this property.
Yes, a lot of people ask us oh, you okay having pets? We charge a pet rent, a pet deposit, which when we look our 236 units.
Yeah.
Let's say that we
That
have
can add up.
30% of people having pets is definitely an income.
Absolutely.
Yeah, let's go look at the model unit.
All right.
A lot of people ask us, why you waste one unit? Why not rent everything? Usually it's going to be throughout the year, a couple units empty, turning. We're
Yeah,
never at 100%.
What's the occupancy rate right now?
Because we did this first batch of renovations, so it dipped down a little,
Okay.
dropped to 90s,
90s, okay.
but we want to push it. We want to stay at 95, 97.
95, 97
That's
is the target.
that's the target. If you're 100% all times, that means your rents are too
Rent's
cheap.
too low, right? Yeah.
But as we were talking earlier when we went to the playground, I'm big on selling the vision, on the
Yeah.
marketing, right? So having the model unit, it definitely paints the picture. You know, when you're selling a house, right? My wife, for example, we're looking at a house. She liked only the houses that were staged.
Yeah, exactly.
The one that
right.
was just empty, she didn't care for
Yep.
much, right? And
creates
it
the vision.
creates the vision,
Helps people see it, even if it's not their stuff.
100%.
And then that gets you into buying more, more stuff. They're like, we got to get that. We got to get the same. The couch,
Exactly.
you
I
know?
want to get this couch
Yeah.
and, you know, just give that fresh and paint the picture of, you know, sometimes people have no clue of what would it look like, you know, and I think it's definitely part of this whole marketing or, you know, selling the customers that come here to say, this is the model and this is how it looks like.
Are we walking or are we jumping in?
Let's just jumping in.
All
It's
right.
not far, but yeah.
We're going to hop in and go for another. This is the coolest thing about having an apartment complex is the golf cart taxi, right?
Those are the townhomes floor plans. You can see,
Yep.
the windows, and which is very desirable here in this area. 'Cause,
You said that was unique around here, right? 'Cause
Yeah,
there's not a lot
on
of
this,
townhome options.
there's not a lot of townhomes, and you know you can't accommodate a family. It's more spacious.
Yeah.
Looks great.
How many bedrooms in those?
2 bedroom.
2 bedrooms?
2 bedrooms in a little den thing. It can be like as used as an office. It's a very cool floor plan. I wish that we had some of them to show you guys.
Yeah.
Obviously, we're gonna try to get as close as possible to the leasing office,
Now, something I noticed here, we talked about this in some previous videos, painted, right? Because of a tripping hazard there. We've got some offset of the concrete a little bit there.
Yeah, we're in another property. We're in the middle of a lawsuit that a DoorDash guy, he claimed that he tripped and fall on the last step of the fall and sued the property, sued the management company, sued my company.
Jeez.
Yeah. Which you still, and you might be asking, what is for the investor in this, you know?
Yeah.
So definitely we are created a lot of different umbrellas and robust with our leveraging professionals or lawyers to protect us investors for things like this, you know? And for us, it's just gonna get, nothing's gonna go with it, but probably the property is gonna have to settle in the mid-ground or something because the city came and did an inspection. If it really was a trip hazard, it was not. So it's gonna end up settling. But it's a little headaches like this. It happens on day to day, unfortunately.
Yeah. So this is very similar to the one that was renovated.
Yeah, it is.
Or is being renovated. It's a very similar floor plan.
Yeah, it's exactly the same floor plan actually.
Okay.
And
So we got about 740 square feet.
I love this floor plan. Look how spacious it is for
Yeah.
a 1-bedroom apartment. And that's the thing. Going down here the street, you see our competitors. You know, they don't have like this as this floor plan, and that's what I love about this. And that's where we decorated really
Is this
cool.
real wood?
Yes.
Yeah,
Yeah.
wood burning fireplace. The only thing it's missing here they're gonna do is the cabinet fronts, but other than that,
Gonna change out the cabinets.
Yeah.
Or the doors.
Mhm.
Put a little shaker. Oh, shall we? No. Got the fridge in.
got
we got
the
the
fridge in
stove.
here.
Nice
And-
quartz countertops. Yeah, really upgraded for a smaller unit.
Yeah, let's take a look at the bathroom. This one, it has the washer and dryer
It says
connection.
full washer
here.
and dryer. Yep.
Full connections. Bedroom here, very spacious.
There's only once or twice in my life where I lived in an apartment. Yeah, twice, I think. I was in an apartment that didn't have washer and dryer. It's like one of the most inconvenient things.
Yes,
in
yes,
the
it
world.
is. And there's a lot of 70s, like 79s, and then it's gonna have a lot of apartments that do not have
Yeah.
washer and dryers. And to install them is quite expensive.
Yeah.
So we need to, that could definitely be an amenity, improve the value of the property if you're willing to do that construction part, because now you need electrical to support a 30 amp breaker that's going to support the washer and dryer. but also plumbing, the ventilation to get out. So imagine it makes it into a half construction.
Yeah, very nice. Let's check out the bathroom.
All right, so
Yeah, nice countertops.
New
Toilets.
The toilets are not new because they're already the water conservation toilets. If they're the 3 point something gallon, we definitely changed it. But this is already it's not the best. I actually have better technology than this, but this is okay. And we resurfaced the tub. So it looks very shiny because they do put this coat of resurfacing. It looks really good actually, but it's an existing tub.
Okay. Yeah. Very nice. Now up front here, you said you're going to work on some landscaping.
Absolutely. So right now, just
you don't like the
bear.
You don't like the desert. The desert.
I don't. This is definitely a low maintenance desert, right? Because you don't need water much. And as far as landscape, you need irrigation. So that's the first thing. Is we're gonna fix all the irrigation. Then we're gonna this whole area here. We're gonna do a very nice landscape design and garden.
Because first impressions matter, right? So when this is where people are driving into the complex, coming into the leasing office, and it's not bad, but at the same time, grass just really adds a lot of.
It has to prove, and it has to be in its small dosages. And I tell you why. If we over improve this property, we have a lot of foot traffic, people that drive by. They automatically think it's expensive. It's like I can't afford this, and they drive away. Right, so we got to be enough that is welcoming, it's cozy, and the people are like, man, I can see myself living here, and that's the whole focus.
Okay. All right, so you want to run through some numbers on this?
Let's go, man.
Let's do it. All right, Neander, so we're back in the office. Let's dive into some more of the details and the specific numbers on this property. So can you cover the quick summary of this, and then we're going to dive a little bit deeper into some of these metrics.
Absolutely, Levi. So this page here is one of the first pages of our slide deck, and we're going to just have the overlook of this asset, looking at it as an investor perspective, right? So Luna Vista, as we covered, is in Fort Worth and 236 units. It was 1979 built. The purchase price that we locked down on this property was $26 million, 26.15. And here's comes a little bit after, and we're gonna dive a little bit into the projection, how we come up with this number, but it's a 90% total return with a 6% annual cash flow in this asset, right? So basically for the cycle period of this project, we're 1.9x on your money. So you're gonna invest the 90K, and then to the end of the cycle of this project, it's a 1.9, and the minimum investment is 50K. The unit price. Go ahead.
Oh, I was just going to ask, real quick. You jump back on it, but minimum investment $50,000 on this particular property. Of course, it's closed up now, but that's what it was. 506B. Could you touch on 506B real quick?
Absolutely. So SEC compliant to everything that you raising capital for, right? There's a 506B as in Bravo and 506C. 506B is private party only. We need to have a pre-existing relationship with our co-GPs who's running this deal, right? We need to be friends, but we need to have a pre-existing relationship. We can be met each other through our networking. It's not that we build a relationship, but not the best thing to do that. It's get acquainted. Right, and I know, Levi, a lot of people watch your YouTube channels. They should jump in a call with you and get acquainted with you, so that way they can advise on those private properties like this, and investments. Now, 506C, you can open up to anyone. I can put a billboard right here on 35, say, hey, invest in Luna Vista. It's an awesome apartment asset. But the only caveat is this, that it only allows you to be accredited investor. So that means that you need to have a net worth over $1 million, and that out of net worth does not include your primary residence. It has to be your investment and your net worth needs to be over $1 million, and they check really strict. We usually hire a third-party company that we have to provide a couple financials to make sure that you're proven that you are a credited investor. Now, on a 506B, you can take anybody as long as you have that. You don't need to have a net worth over $1 million. You can invest. There's a limit for it. I believe it's 35 investors that you can get in per deal as non-accredited. But usually a lot of the people, it's a mix, right? In 506B, you can have both accredited and non-accredited, so end up being okay.
Yeah, and I just want to stress on that. So, those of you that are watching this video right now, if you're not an accredited investor, well, if you are, you know you are. If you're not sure if you are, you may not be, but that's okay because we are doing several 506B offerings, which is why whenever you fill out the form below, I ask you to jump on a Zoom call first with me before we present you the next opportunity. Because as Neander said, we have to establish a relationship, get to know each other a little bit better before we can offer you the next opportunity. So that's what we've been focusing on is the 506B, and that allows your everyday they like to use the term sophisticated investor, which means hopefully you have some investment knowledge, but that's the reason we have that conversation. And if you have some investment knowledge, you've done some previous investments, then you don't have to have the backing of the net worth or show that on paper, which is a huge advantage. And also to get in at 50K, I'm a part of a lot of syndication groups. Most of the time, they don't do less than 100, sometimes 200K on their investments. So to be able to jump in at 50, I think is a huge advantage of working with us and our team. But again, this one is closed out. But yeah, it's a great overview. You were talking about price per unit, which is, I mean, that's pretty low. That's low compared to average, wouldn't you say?
Yeah, absolutely. So this is where you compare to buying any type of property. Obviously we buying as a whole, the whole entire complex. But if you think about it, a price per average out based on the total cost of the property, divided by units. This is the average out. We look at that as well. So yeah, definitely attractive price. And right now we actually, Levi, buying property as a discount. So last year, I bought a property that was a smaller, 176 units, and was smaller, and we pay 126 per door, right?
Yeah.
Now we definitely are seeing as a discount on a multifamily sector as well, discount price. So definitely now it's a good time for buying. That's what I'll just put that in there.
All right, so let's get into some of the comps.
Absolutely. So comps is very important that, it's going to determine what, on that street as you drive by, there's probably 6 or 7 other apartment complexes there. And we have to put into our shoes of somebody that is looking for an apartment to live. So where they're going to look definitely is going to be a price point, is going to determine a lot of that decision making. But so on the renovations that we want to do, we don't want to over renovate to make something that is really expensive they're not going to be able to afford. So we make that projections here. We go there and shop our comps. We really go in there and say, hey, what is the price point that you're renting? What's your amenities? And we do that study in very intense. So if you see here in the column here, that's the current rents that we bought the property. Those are the rents collected there. So pro forma, after we perform the renovation there, this is how much we're going to be collecting. And that's a 15% increase. The highest you see it is a 23%, and the 1 bedroom, 1 bath, because there's a high demand for those. So those is the one that we feel that we're not charging enough. And by raising it to this point, the 22%, we're definitely going to come in there. And we look here in the competition, they're actually, we're a little bit above and a little bit under. So this is Cabo Hill, Casa Villas, the Crosby, Ties and Oaklands. Those are 5 properties here. There are on the same street actually that is considered our comps. So we're right there in there. And as you can see here on the last line, the townhome, as we talked about yesterday, is very desirable for the area because there's only 2 properties here that does have townhomes. And us, we have some townhomes, and it makes very desirable. So that's why, Levi, we make those projections based on actually what is the competition, what is that market there, so to make sure that we are aligned with them. We're not too expensive, we're not underneath either, we're right there in the middle, so make it very competitive.
And whenever you're bringing these rents up after renovation, you're forcing appreciation into this property, correct?
100%, absolutely. The appreciation value of the property is going to determine by how much rent that we collect, how much money, dollar amounts. It's not, the unit, the building itself, it does have some type of appreciation, but, since we talked about it earlier, is businesses. So all the dollar amount counts, so this is what they're going to determine the value of that property. It is the dollar amounts. Right, let's talk about the loan. And right now it's interesting time. By the time of this recording, people are is the first thing that pops into your head. What is it, Levi?
What? Interest rates.
Interest rates, that's right. So we locked down a fixed interest rate, and I repeat, a fixed interest rate, 5.79 which is actually pretty okay for this time of this
Well,
recording.
yeah.
I know.
How could you do that whenever everybody's? I mean, interest rates all last year because we closed this one up late last year, but interest rates were still about 7.5% on single family homes, and I think that's what a lot of people are always seeing, especially in the news. So, how do you lock up a multifamily like this at 5.79?
Yeah, so actually this was a Fannie loan from Fannie, right? So they're government agency, so they're kind of, we locked that in the right place at the right time. Our loan broker was a very awesome guy. That this guy, he watched the first thing that he opens his eyes when he wakes up, dude. He's checking out the feds and all that trend and stuff. So we locked that right at the right time. And that was just, we are very fortunate to lock down this rate, because like literally in a matter of weeks they just went up.
Yep.
So this is the terms here.
This is, and I want to stress here too, because this is, we talk about this on the channel all the time, even whenever it comes to single family homes, is don't get caught up in the noise. We can always find a deal in any market. It just depends on the situation and the circumstances at hand. But people will say, I mean, it's crazy time to buy a home. Why would you even think about buying 133 units? And it's like, well, it's not about that. It's about what's the rate? What are the numbers? What's the what's the cost per door we're getting this? I mean, it's really just a logical look at, does it make sense or not? And if we can lock in 5.79, especially this time of the year, whenever things are higher than that, I mean, you have to take advantage of that opportunity.
Absolutely. And for me, when you buy an asset like this, is a combination of, and since we are buying at a discount price, Levi, ultimately, of course, the loan is going to be a huge part of this. But since you're buying in a discount price, like at a lower price, and let's say that, everybody believes that the interest rate is going to come down. Some people don't, but I do believe there's going to come down. And then we'll be able to refinance. But the price that we paid for, that doesn't change.
Yep.
You know what I'm saying? So definitely we're going to do as best as we can to push this property to appreciating value by really, doing the amenities there, doing the renovation, so that way the value keeps going up. And then whenever that time comes to refinance, we're still going to be able to cash out all the equity paid to the investors and still hold the asset. So definitely makes it attractive. All right, cap rates. Cap rates is what it determines the value of the property, right? So cap rates goes by, the regions and by the pockets of the city that you're buying in. And you're going to have a cap rate, which is NOI, net operating income, divide by cap rate. This is what determines the value of the property. That's why I always say about every penny that you collect on the property, it's the NOI, right? That's why it determines the cap rate. So we use two main sources that one of them is CoStar and the other one is Yardi. It's two very known nationwide data sources that we go to check what the cap rate is and the projection cap rate is, because that sometimes it does fluctuate. So based on the CoStar and Yardi, the report, they're actually, for the time that we're planning on sell this property, they are recommending that this is going to be the current cap rate, 4.7, okay? And we are underwriting this deal today, and projections to the end of the cycle of this deal at 5.9. So that's why we come with the slides that we showed in the beginning, 90% return, 60% in cash flow, right? Yep. Now, if Yardi and CoStar are correct, our projections will be 151% return of investment. So that's crazy. But again, we always have to be conservative. Right. Always be conservative, because, if you win, everybody wins. But 90% for me, as an investor, is a really, really damn good.
All right, so let's talk about tax advantages. And by the way, Neander and myself, neither one of us are CPAs, legal experts, lawyers, or anything at all that deals with taxes, except for the fact that we hire our own accountants, okay, to handle this for us. So this by no means, shape, or form is a tax advice or counsel or anything whatsoever. But it is necessary to understand there are tax advantages whenever you're investing in these properties. Whether or not they apply to you will have to be a discussion between you and your accountant. So Is that fair, Neander?
That's fair. That's fair. But it's something that this to be as educational. They tell us about other example how we use tax advantages, because we are just doing exactly what the government wants to do. We are stimulating the economy by buying apartments, and so there isn't a textbook's advantages for those that become investors, right? If you remember Robert Kiyosaki, that he talks about the book ESBI, the best where you want to be as an investor, which is that automatically you pay less taxes for that, and there's advantages. Shift throughout the years. It used to be 100%. You could use that depreciation. Now it's about 80%. They just passed it along, this new one, and it's almost approved. It's gonna go back to 100%. But we developed this. We hired this company to come and do a cost aggregation study on the property. So they look at every single aspect of the property, electronics, ACs, and they use the depreciation. You'll be able to depreciate in year one, and that will defer your taxes, right? But again, consult with your CPA and how can you utilize this. But every when we buy this property, after we get out of those distributions and such, you're going to receive a K1 that is just like a W2. It is the investors for real estate get a K1, and then you're going to apply to your taxes. A lot of CPAs are very familiar with that and how to take advantage of that, but impressively enough, a lot of them don't. So you can get recommendations by the other, being a group like this with, Levi's group and all those groups, that you'll be able to access people like that, lawyers that it's, familiar with real estate, CPAs that are familiar with real estate. They'll be able to tap into this network and become an investor, a sophisticated investor.
All right, and let's run through a hypothetical here, some projected returns based on whether you invest 50, 100, or 250K.
Absolutely. So there's going to be year 1 through 5 in a sale, right? So if you invest 50K, the first year it's a little bit less. It's at 3% because we're going to be conservative to build some reserves to the property. Just to build reserves to, we already start day one with a bunch of resorts, but the year one is actually you get the pulse of the property. For example, Luna Vista, we already changed the management. We already got look at the books and the rent roll. We kind of, change a little bit of the clientele as we go, did some renovations. So the property hurts a little bit when we just take over, right? So we need to be conservative, but again, if I was doing the property overperforms and we'll be able to do this enough, we'll be able to issue more distribution. But this is based on projection being conservative. So if you invest 50K, year one, you get 1,600. And now if you invest 100,000, this is obviously going to be double. And then year two, let's just base on 100,000. This is the average investors that usually invest with us. On year number two is 5,666. And then on the profit of the sale, 61,000. And this is your profit here, a total rejection. And if you invest 100, so you get your 100 back plus 89K. Again, remember when I showed you about CoStar and Nardi, guys, this is very conservative. Okay, but now if the property overperforms, then this number changes dramatically. And remember, if the CoStars are correct, which they usually are, we're gonna be actually on 150% return. So it is just definitely insane.
Wow, that's great.
All right, and last but not least, I would like to touch a little bit on the renovation side. Yes, Levi, we went to see some units and we saw the progress and we saw the finished unit. And so we are projecting to renovate 112 units out of 236. And you might be asking why you're not doing at all. Well, first of all, it takes time because we're not going to just get the people out. Hey, move out. We need to renovate the unit. We always going to push for a renew and do a little bit of adjustment on their rent to bring it at market rent, without having to, because that way we save a bunch. We don't have to renovate. People that are willing to stay, you understand how pain in the butt it is to move sometimes, and people just don't want to move. And it's a natural thing, prices go up, groceries go up when they're going to renew after their rent, their contract renewed, it expires as they want to renew, and then it's going to be optional if they wanted to stay. If they want to stay, we don't need to put all that money to renovate. We're just going to go in and renew those fellas. So it takes we estimate about 3 years to complete all those renovations, and we experience those turns Might be faster than that, might be a little slower, but this is what we're planning to renovate 112. Another benefit of doing this is that we actually leave some meat on the bone, what we call it, for the next buyer, making it attractive, because that way they're gonna come in. It's like, man, if I keep pushing on those renovations and increasing the rent, there is a lot of upside for me as a buyer. So, that's part of the strategy as well. And we're putting aside, we already have this money up front. This money doesn't come from the operations. We already have this money along with the raise on the purchase price of the property. But whatever the capex that we're gonna do, expenditure in this property, we already bring this money together, and we're already gonna be spending as we go. So for the unit renovations, we're expecting $2.3 million on a conservative side. We always go under that, but in case we need to run into some problems. All right, my man, that's great. I appreciate it, dude. I hope I added value for you guys, and I was meeting your expectation, dude. I'm intimidated. You guys are all pros and kick ass.
It's no, you're good, man.
Thank you, my brother. Thank you so much for this opportunity. I really appreciate it.
Thank you, man. Appreciate you. And there you have it, another one of our amazing properties here in the Dallas-Fort Worth area. And again, if you're an investor, fill out the investor form below. Again, you do not have to be an accredited investor. A lot of the opportunities that we're opening up right now are the 506Bs, which are friends and family, right? It's a private community, but you heard Neander say that if you're not an accredited investor, that limits it to 35 investors. So you want to get on the list below. What will happen is I email you whenever we have a new property coming up, and I ask you to jump on a Zoom call with myself. Well, so there's usually other investors on there, 3 or 4 or 5 of them that we get each week, and I have a discussion, get to know you a little bit better, talk about your goals, what you're looking to do. That's it. We just have to establish that relationship, and then I will open up the opportunity for you to see what we're working on right now. We just finished up with another property we were raising on. We were able to get that one wrapped up, so I'm excited for that one, and we have a couple of more coming down the road, but you have to get on the list down below if you want to be notified. So that's it, and hope you found value in this video. Again, please like and subscribe, and we will see you on the next video.